Welcome to Curious Coffee Conversations with NASA. Hello, cerebral wanderers and listening entities. Our coffee, their feeds, one shared curiosity.
I absolutely love that opening. I'm Lucy, and I'll be guiding you through today's conversation built around NASA's research.
In this episode, we're unpacking a topic that's as complex as it is compelling, the GCC's AI paradox.
And I'll be your host for this episode.
Okay, so the Gulf Cooperation Council, the GCC, they're in the middle of a massive AI gold rush. I mean, the investment is just staggering. The ambition is truly global. But, and this is a big but, there's a paradox right at the heart of it, a real high-stakes tension between this incredible innovation and a pretty critical governance gap. So let's dive in and break down what's really going on here. All right, first things first, let's set the stage, because this isn't just a GCC thing. It's a global problem. You've got AI innovation moving at, just lightning speed, way, way faster than the rules that are supposed to govern it. And when that happens, well, the consequences can be, let's just say, catastrophic. And hey, this is not theoretical stuff. We're talking real-world examples. Back in 2012, a trading algorithm just went rogue. Knight Capital, they lost $440 million in 45 minutes. Just poof, gone. Then you've got 2019, the flash crash, a $1 trillion swing in the market, partly thanks to algorithms. And this is happening right now, too. A deep fake of a CFO. It fools an employee into wiring away $25 million. You see, these aren't just little glitches. They're huge, costly failures of AI that's just not being governed properly. So, to put it bluntly, AI risk is already costing the world billions. This isn't some far-off futuristic threat. It's happening right now. And that brings us right back to the GCC, a region that is doubling down on AI like almost nowhere else on the planet. Look, the GCC isn't just trying to participate in the AI race, they are playing to win it. The whole region is betting big on AI as the key to their future, a way to build these dynamic economies that go way beyond just oil and gas. And the numbers? They are absolutely staggering. We're talking about generative AI, just that one piece of the puzzle, potentially unlocking 35 times billion dollars in economic value. Not total, every single year. The potential here is it's massive. And listen, they are absolutely putting their money where their mouth is. You've got these huge, ambitious national strategies. Think Saudi Arabia's NSDI or the UAE's AI 2031. They're pouring sovereign wealth into building out data centers and cloud infrastructure. And adoption? It's through the roof. 84% of organizations are already on board with AI. And check this out. 79% are already using or at least experimenting with autonomous AI agents. We're talking systems that can act on their own. That's a huge leap forward. But here's where the story takes a turn. All that incredible investment, all that ambition we just talked about, that's only half the story. Because here's the paradox in a nutshell. While the GCC's investment in AI is totally world-class, its policy, its governance, well, that's lagging behind. And that creates a really, really dangerous gap. Okay, this table right here, it basically tells the whole story. Look at the top line, investment in AI. The GCC is rated advanced, right up there with the EU, with Singapore. That's fantastic, right? But then look down a bit. Ethical AI and governance, human-centric AI approach. See that? The rating drops. Meanwhile, the global leaders, they're still at the top. That right there, that difference, that's the core of the entire problem. So the question is, why the gap? Well, the analysis points to something it calls the soft law ceiling. Think of it like this. It's a structural barrier. It means you can have all the strategic intent. You can pour in all the money in the world, but you just can't break through to that top-tier leading status without having comprehensive, and this is the key word, enforceable regulation. See, right now, the GCC is mostly relying on what's called soft law. We're talking about things like national strategies, voluntary frameworks, and that's a great starting point for sure. But it's not hard law. Hard law, like the EU's famous AI Act, that stuff has real legal teeth, real consequences. And without that, you're just going to keep bumping your head on that ceiling. And look, this isn't just some abstract debate for policy wonks, okay? This governance gap, it creates very real, very tangible, high-speed risks, the kind of risks that can have absolutely devastating consequences in the real world, especially in a high-stakes arena like finance. In fact, the source material makes a comparison that is, well, it's pretty chilling. It basically says the systemic risk we're seeing from ungoverned AI today is conceptually identical to what we saw with the high-frequency trading algorithms that led to the 2010 flash crash. It's the exact same kind of danger. Incredibly complex, totally opaque systems moving way, way too fast for any human to possibly keep up.
So let's make this real. Let's walk through a scenario. Imagine a big bank in the GCC. They roll out a shiny new Gen AI model to automate their credit scoring. The goal? Simple. Speed and efficiency. Faster, better decisions. But here's the catch. The model is a complete black box. No one, not the developers, not the executives, really knows how it's making its decisions.
So what happens? Well, the model starts spitting out results. And it turns out it's consistently setting lower credit limits for certain groups of people. All of a sudden, the bank is staring down the barrel of huge issues. We're talking bias, fairness, a total lack of explainability. It's a reputational nightmare. And because it's a black box, they have no idea why it's doing it. This is exactly what we mean by the governance gap in action. And this, right here, leads to what the analysis calls the value paradox. Just look at these numbers. It's fascinating. You have 84% of companies saying, yep, we've adopted AI. Great. But ask how many have actually scaled it across their whole enterprise. That number drops to just 31%. And then the killer question, how many are getting real, true value from it? A tiny 11%. See the problem? This is where that lack of governance directly hits the bottom line. Without the trust, without the guardrails that good policy creates, companies just can't scale this stuff effectively. And that $35 billion promise, it never really shows up.
Okay, so the challenge is crystal clear. But you know what? So is the opportunity. This isn't just about pointing out a problem. The analysis actually lays out a clear, actionable blueprint for how the GCC can smash right through that soft law ceiling and become a genuine global leader, not just in AI innovation, but in AI governance too.
And it boils down to 5 strategic recommendations. Step 1, take all those great principles and codify them into enforceable, hard law. Give them teeth. Step 2, mandate board-level AI accountability. Make it so the buck truly stops at the top. 3, a big one, invest in domestic talent and build up those capabilities at home. 4, specifically for finance, strengthen that algorithmic risk oversight. We can't have another flash crash situation. And finally, number 5, get ahead of the game. Start developing governance for those autonomous AI agents now, because they're spreading like wildfire. So, at the end of the day, it all comes down to this. The GCC has proven without a doubt that it can lead the world in AI investment. That box is checked. The question now, the multi-billion-dollar question is, will it also lead in AI responsibility?